U.S. stocks are continuing a downward slope today after falling sharply last week. On Friday, the Dow Jones Industrial Average closed down nearly 1,000 points, recording its worst day since October 2020. The Nasdaq Composite fell by more than 330 points, while the S&P 500 dropped over 120 points. That was the biggest one-day drop for both indexes since March 7th.
In a time when almost everything in the stock market is going down and everybody is talking about a looming recession, deploying capital seems like the last thing anyone wants to do right now. On top of that, the market is absolutely punishing companies prioritizing growth over profit. Yet, you hear investing OGs like Warren Buffett, aka the Buffinator, and Peter Lynch, aka Pete from the streets, saying the exact opposite. The veteran investors are saying it's time to dance in the storm. Warren Buffett once said, "The best chance to deploy capital is when things are going down." At one point, Peter Lynch even said, "I found that when the market's going down and you buy funds wisely, at some point in the future, you will be happy. You won't get there by reading. Now is the time to buy." They say, once you read, now is the time to buy, in the headlines, it's already too late. SoFi losing almost 74% of its valuation from its all-time high is crazy. SoFi's current valuation is also crazy. But what's crazier is that despite all of that, analysts are still bullish. Do you see anyone saying sell? Nope.
It's all for one for all.
So you know what this means. SoFi is getting pulled in all different directions. Fundamentals, analysts, and retail investors are bullish, and yet Mr. Market is currently just not vibing with it. Now,
Well, then why did you keep buying it?
in this video, we're going to be discussing why analysts are saying that the stock has a strong upside. Make sure to stick around until the very end of the video. You don't want to miss this. Before we crack into it, we are not financial advisors and this is not financial advice, so always do your own due diligence. By the way, ladies and gents, we have officially closed our Patreon, and thank you to everyone who joined. You all make these videos possible. To those of you who missed signing up, honestly, we don't know when we will be opening it back up. Without further ado, let's get right into it. The SoFi road has been a quite bumpy one thus far, from the student loan moratorium being extended to the company lowering its guidance for the whole year of 2022. And most recently, some of its management team / board of directors leaving the company. On top of that, SoFi is in the midst of blitzscaling and isn't quite profitable just yet. Despite all of this, why are analysts still bullish on the stock?
Did you ever wonder why?
Let's see what analysts have to say about SoFi stock. Although Mizuho Securities analyst Dan Dolev, or as we like to call him here, Danny D, lowered his SoFi 2022 estimates and price targets from 17 to 14 due to the impact of the extension of the student loan moratorium, he remains bullish on SoFi stock, arguing that there is no incremental weakness within the company. According to Dolev, SoFi lowering its 2022 guidance due to the extension isn't surprising at all. In an interview with CNBC, Dan Dolev even described SoFi's last earnings call as a very strong quarter.
Thanks for having me again. Look, this is not just a strong quarter, this is a very strong quarter. I've actually never seen something like that in the history of SoFi. So everything that we track, all these KPIs, products, members, products per member, they're accelerating, and they're accelerating at a faster pace than they've done in the past. So, they're firing on all cylinders. That's probably an understatement.
David Chiaverini, hope I'm saying that right, Wedbush analyst, also remains bullish on SoFi, viewing its valuation as attractive relative to its growth prospects. To our fellow Sofian soldiers, on May 10th, SoFi's first quarter earnings call this year is a very important day.
It is a very important day.
Even though the effects of the bank charter will not yet be felt in this earnings call, make sure your reminders are on and seatbelts are buckled. The markets have already shown that sometimes they don't acknowledge strong earnings calls, at least at the moment. But regardless, let's all hope for a very strong Q1 2022 earnings results. We will be covering the Q1 results with a full breakdown, so be sure to subscribe if you haven't already and hit that notification bell. Despite all the negative temporary setbacks SoFi has been facing recently, they continue to focus on what's important, and that is crushing the competition. SoFi announced an increase to its 1% annual percentage yield to an industry-leading 1.25% annual yield for all members who have direct deposits, and an offering of 0.70 APY for those looking for a high-yield opportunity without direct deposit. According to their official press release, SoFi checking and savings members will earn these increased rates on all of their money with SoFi checking and savings, with no limits or balance balance caps to earn interest. This includes no fee crypto purchases via direct deposit, on top of zero account or overdraft fees, no minimum balance, no limits on transfers between checking and savings, up to 2-day early paychecks, and a fee-free ATM access via the Allpoint network. Less than 2 weeks after announcing this good news to all SoFi members, SoFi said,
"But wait, there's more!"
On April 18th, SoFi announced that SoFi checking and savings members with direct deposit can start earning 3% cash back on all eligible credit card purchases for a full year when they apply for and get approved for the SoFi credit card. The 3% rate will be applicable on up to 36,000 points, or the equivalent of $12,000 spent on the SoFi credit card for 1 year. If you do the math, that's almost $360 worth of cash back on your first year using the SoFi credit card. As someone who has the Citi Double Cash credit card, which is known in the credit card game as one of the best cashback credit cards of all time, I must say this is pretty impressive.
Very impressive.
SoFi's bank charter approval is a lot like a turbo in a car. When you step on the gas, you don't immediately feel the turbo. You have to give it a minute to truly feel the effects. This is called turbo lag, but I guess in this case, we can call it bank charter lag. The same goes for the bank charter. If you've gotten this far in the video so far, comment SoFi turbo lag down in the comments below so we know who's still holding the front lines in the trenches. SoFi is really committed to helping its members get their money right. The company isn't just present in any step of each member's life, but it is also helping its members fight inflation and multiple interest rate hikes. It's only been a few months since SoFi got its bank charter approval, and they're already coming out with industry-leading offerings. Just imagine how much more they can offer after a whole year. SoFi's products are either best in class or on their way to becoming best in class, yet the stock is priced as if the company was worst in class. This discrepancy between what the company is doing and what the stock is selling for seems to be why all analysts are either saying SoFi is a buy or hold. There's a timeless saying that goes, price is what you pay, value is what you get. Benjamin Graham. With SoFi's stock price being at an all-time low, we here at Wealth Gambit feel the value for what you pay is insane, and apparently analysts think so too. Shout out to all of you who showed us support in our previous videos. You guys are the real ones. If you haven't already, make sure to follow us on our social media pages at Wealth Gambit, and don't forget to join the SoFi Investors private Facebook group if you haven't done so already. Also, special shout out to everyone in our Patreon community. This community has actually grown pretty fast. You guys truly help to make these videos possible, and we really appreciate all the support. We will do everything in our power. We will do our absolute best to provide the most value possible. Shouts out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzil, LaShonda Snyder, Reginald Davis, Les Broadway, Christian Cardlife, Kevin Beaufrand, and Jay Bone. We truly do appreciate you guys. If you found any value in this video whatsoever, make sure to like and subscribe for the YouTube algorithm. Also, make sure to share this with anyone who you think might get value from it, and don't forget to turn on that notification bell so you're updated once we drop a new video, like the Q1 earnings coming up right around the corner. Thanks for watching, and until next time, ladies and gents, peace.